Not every strategist gets it right every year. We understand that. But take us through what exactly drove your thought process when you put the 2023 target price on, that is pretty accurate, and why you think 2024 could continue.
Great. Well, thanks, Dom, for having me on the show. First and foremost is when it came to 2023, we just were recognizing the fact that the Fed had been remarkably successful at beginning the process in 2022 of raising interest rates somewhat dramatically at one point when it raised 4 times in a row, as I recall, 75 bips apiece, but then overall been remarkably gentle or sensitive towards the effects of its mandate on the economy in terms of raising rates, but not raising them overall in such a way that it would push the economy into recession. In addition to that, you had resilience that remains to today in labor, in wages, in businesses being able to maneuver through a rather tough environment, dealing with inflation that remains fairly sticky, and a central bank that remains vigilant against inflation while being sensitive. And for 24, for next year, what we're looking at is effectively a continuation of this policy. We think those, that are expecting a lot of rate cuts in the first quarter, we think they're being a little bit, they're wearing rose-colored glasses and party hats, perhaps. But we respect their thoughts. We think for traders, it's a big bet, right? But we think the Fed is more likely to do cuts in the second half of the year. Likely at least 2 cuts next year, and most likely in the fourth quarter rather than much earlier.
John, if that's your base case scenario, what exactly then does lead the charge in 2024? Is it the same old story about the Magnificent Seven, mega cap technology, media, telecom type stocks, or are we due to see this kind of broadening out, so to speak, of where the rally is going to be headed?
I think, Dom, that it's the latter. I think it's a broadening, but I still think you have technology at the core of it. We believe technology today is likely unparalleled to where the U.S. automobile was in the early 20th century, when after Henry Ford had essentially mechanized the assembly line and brought up the quality and reduced the cost, making it accessible to everyone. Today, technology deeply embedded in the lives of business as well as in the consumer as a result of that. Big changes, including some of those that already exist in AI and those that are likely to be forthcoming, not the pie in the sky stuff, but the stuff that really applies to day-to-day operations and business and the way the consumer reacts. We think that's going to help feed all the other sectors. So we still look for technology and communication services to be in the lead, but look for a continuation of good things in consumer discretionary, and likely a pickup in industrials. The industrial sector, in the old days when I got into this business 40 years ago, there was a lot of brass and glass and plastic. Today, it is, when you look at technology, it's in the clouds. It's deliverable by software that can upgrade your car in its driveway. It's ubiquitous, deeply embedded in our lives.